0.01. Here's the daily chart. Parabolic wedge, 1, 2, 3, down to a psychological level. Weekly chart. Monthly chart, bottom of a trading range. You know, we're not at the exact bottom, but we're near the bottom. So do I think we'll get near the high of the day or the low of the day? I think we're always in long. I think it's more likely that we'll get up near the high than near the low, but I think this may turn into a low too short, and we may test down lower, like below the 4 low. Remember I said we might get a low 2 bear flag here. Bulls are trying to get a bull breakout of a bear flag. So far, not a strong buy signal, 18, and so far not a strong breakout. Still forming a tight trading range. My preference is that we form a low 2, break to the downside, and then reverse up. That would be a higher probability trade. The bears double top 15, but to me this looks like we're trying to test up. We failed at the moving average, 7 and 9. Bears will sell strong bull closes at the moving average, betting that the channel down will continue. Bulls will buy the breakout, betting that we'll get a test up to the high of the day. I think trading range, although it's possible, this is a major trend reversal that leads to a leg 1, leg 2 move up. The bulls need to get above the moving average. They need to get above the high of the day. They need to get above yesterday's low. And the price action since bar 6 is trading range price action. So that reduces the chances that the bulls will succeed with all of those objectives. Stop right now. Can you put it below 20? That would be the tightest acceptable stop. Bull close at the moving average. Okay, swing short, stop above the high of the day. Probability is we'll go up more, so it's a low probability short. Potential for a triangle, a lower high and then a higher low. Then breakout mode. For the bears, double top, 15 at the moving average. For the bulls, strong enough breakout 20, so probably buyers below 21 and more sideways, maybe more up, second leg up. So the probability favors the bulls, but the reward for the bears is much bigger than the risk. So they get the reward versus risk. The bulls get the probability. That's the usual trade-off on any trade. One side has a higher probability, the other side has a bigger reward relative to risk. The bigger this bar becomes, the more likely it is we'll test down. You know, you look at bar 20, a breakout, a bull breakout of a bear flag, but you always have to be thinking that there are bears looking to short strong bull bars up near the moving average. Whenever there's a possibility of a bear channel, there are always bears doing that. Again, low probability, but reward much bigger than risk. Bears trying to close the bar on its low, increasing the chances that other traders will short below the low. Big enough tail, so I think not a high probability short. Tells me that a lot of the bears who sold the 20 close probably scalped. $16 bar close in 12 minutes. First bar of the day, real bar, but mostly a trading range bar, prominent tails top and bottom, and second bar inside, so more trading range. Bulls want a second leg up. Bears want a second leg down. So first leg takes us to around the 4 low. Looks like we might be headed there. Trading range day, 4 low, the entry bar. Obvious location for bulls to put a stop, 1 tick below its low. Therefore support, and therefore a magnet. Again, I think the end of the day is the key price, and it might be the key price all day. Bulls are arguing breakout 20, holding above the bottom of the breakout 19. So they'll buy here. However, to me this is disappointing enough so that even if we turn up, the upside is probably limited. So the bears see this and say, yeah, it's pretty good selling pressure. We'll sell more on any bounce. Bears double top 14, 21. Bulls double bottom 16, 23. But I think that the 3 consecutive bear bars are sufficiently disappointing that the bulls will not buy above 23. We're in a tight trading range since 14 or so. Traders would prefer to buy low, but with 3 consecutive bear bars, I think the bulls need to wait. They can argue, yeah, we fell below 19, but we held above 16. And trading range, it's okay to buy below bars, below 19, below 16, which is true, but you need a wide stop if you're doing that. So just like the bears sell strength, all right, above 14, bull close at the moving average. Bulls will buy weakness, below bars, 19, below 16, below 4. Double top, the bears want a measured move down, takes us below the 4 low. I think that is the downside magnet. I don't know that we'll get there. 60-minute bar closes in 2 minutes. For the bears, they have a breakout below yesterday's low. They have a breakout below a bear channel. So the bounce is a pullback, and this second bar is a sell signal bar, a breakout pullback short. Bear breakout, and then pull back, and then a short below that bar. But we are so oversold, and we're at the bottom of a bear channel. More likely buyers below this bear sell signal bar, and more likely more trading range. Here's the chart with the channel drawn in. I could also draw the channel this way. So am I looking to buy or sell here? Trading range day. I expect bear breakouts to fail and bull breakouts to fail. So I'm looking to buy. But with 4 consecutive bear bars, I'm probably going to, or I am going to wait at least a little bit, despite the double bottom 16. What about selling the breakout? I think it's probably okay because I think the upside is limited with 4 consecutive bear bars. So whatever reversal up we get will probably be sold for a test at least a little bit more down. Anyone shorting here needs to stop above 21, and they probably need the ability to scale in higher because you're getting a bear breakout in a trading range day, and that's usually a low probability trade. 60-minute bar just closed. We get a bear inside bar after a doji bar. The bulls want a high 2 buy, ABC buy, A, B, C. You can see, just like the bears sold the 20 bull breakout, the bulls are buying the 24 bear breakout. The difference is that breakout was within a tight trading range. Here, this breakout has 4 consecutive bear bars. So I think this is more likely to find sellers above. Minimum target is I think